Friday, the Dow had a fairly strong day. Notice the slow curve coming out of this indecisive trading. This is the advantage that candlestick charts provide for an investor. It definitely reveals the nature of the investing during this time frame. Very indecisive. Has two directions to go after an indecisive trading. Either they're going to continue the uptrend or they're going to reverse it fairly strong, especially with their stochastics up here in the overbought condition. However, what was revealed was they're taking it up in this direction, which makes a wave 1, wave 2, slow curve potential breakout into wave 3. Friday's trading caused a little bit of concern from the NASDAQ index because it opened higher and traded lower. Most people say, oh, the NASDAQ was up. However, we could see on the basis that once they opened it, there was selling going on. That was a little bit of a concern, even though the transportation index as well as the S&P 500 were acting well. The NASDAQ wasn't. Today, even though the Dow was very indecisive, the NASDAQ showed us what they were intending to do coming out of this little slow curve, and notice what happened in this uptrend. This T-line, the 8 exponential moving average, there was not a close below the T-line. The uptrend was still in progress, and today's trading kind of relieved the doubts of what was going on in the NASDAQ on Friday. Knowing which direction the market is going, even though it might not be a very aggressive move, it also allows the participation in chart patterns that are performing extremely well. For example, because the market was opening and still trading positive, we recommended SGMS because notice the type of pattern it's creating. Strong price move, a J-hook pattern, and if it opened positive, it was telling us that the resistance level on this J-hook pattern wasn't acting as a resistance anymore. We had a lot more upside in progress. This was also the reason for our recommendation of CREE, C-R-E-E. This is a typical pattern based upon candlestick analysis that once they come up to a resistance level, they do what we call the bobble, but as long as it can't close below the T-line, and notice how there was this what we call the T-line crunch, they couldn't close it below the T-line, and the T-line kept pushing right up through the resistance level. They closed it positive on Friday, and we have a simple rule of the doji. If it starts moving positive after a doji, it's going to move positive for the day, which it did. We were buying on the basis that this was a bobble breakout through the 50 and then a bullish confirmation after a doji, putting us in the right position at the right time with the expectation that this is starting wave 3. If this is wave 1, there's a good possibility you're going to see another 4 or 5 points to the upside on CREE. This is not rocket science. This is just putting common sense investment practices into a graphic depiction and having the statistical returns or statistical analysis of what goes on in price patterns based upon the Japanese race traders analyzing human nature for over the last 400 years. That'll be it. We'll see you in the chat rooms.